Going to get more on the housing market in Spain now with Stephen Nash from FIIG Securities. Stephen, this housing issue or the downturn we've seen in Spain, comparable, probably worse than what we've seen in the United States. But unlike in the US, you can't just leave your keys on the kitchen bench and walk out debt-free. We heard there that some people will carry with them a lifetime of debt. How is the housing situation in Spain moving forward? Has it bottomed, do you think?
We're seeing somewhat of an increase in year-on-year transactions in Spain. I think all you can really say is that there's some stabilisation occurring, which in itself is positive. We have yet to see a real rebound in terms of transactions or prices in Spain. Hopefully more pan-European cooperation can take the pressure off some of these peripheral economies. I think Europe together and unified really makes a lot more sense than exposing peripheral countries to severe austerity as we're seeing right now with that recent statement from the EU. It seems as though we have to wait until the last minute before we find out whether or not Greece is going to default. So it seems a terrible state of affairs right now.
Yeah, absolutely. Hearing from Christine Lagarde just a few minutes ago, in fact, but she seemed at least positive in that she said that Greek authorities show strong resolve and that the austerity measures and budget, it was pleasing to see that they were passed through this week and last week. So do you think we are more likely to see one now? It just might be that week away.
I think it's almost certain that we will get passage of the extra funding to the Greek community going forward. The spectre of a default in Greece is something that I think Europe really knows what it could do to other countries, particularly all the peripheral countries. A country as small as Greece really seems to be dominating the whole debate in Europe. Obviously there's been some difficulties in the past. I think the Greeks have really implemented some tough reforms, and I think that's what the Germans really wanted at the start, and that's really happened now. What we really need now is some policies that focus on getting people back to work and some maybe infrastructure spending in these peripheral states to get jobs going again and stabilisation of the economy.
Greece dominating the situation in Europe, but the fiscal cliff is front and centre in the United States. Yeah. What are you watching most closely when it comes to this?
Look, there's been a lot of hysteria about this issue. I think there's been a lot of investment that's been held up on the basis of uncertainty regarding the fiscal cliff. I think if we get a resolution fairly quickly, there may be some release of those investment funds and we could get an offset to any reduction in government spending. The question is, how much will we get and how severe will be the cut in spending in the US? So I'd imagine that that is an issue that's really not being thought of in detail, and I think the fiscal cliff may be a bit overrated in terms of its impact right now.
There's some suggestions we're not going to see any real cuts at all. Instead, we'll see a bit of a bubblegum and shoestring approach, and that they're really just going to shift around the legislation so that there is no cliff. What would that outcome mean?
Look, I think probably the most likely outcome is a delay of this spending cuts and tax increases until we get more momentum in the economy. So I think in the period between 2013 and 2015, we may get more moves by the rating agencies. We may get more downgrades of the US. Will that really affect US Treasuries? Probably not, as they still remain the most liquid market for bond trading in the world. I imagine that a downgrade of the US really won't be that much of an issue, although we saw last year that it can occupy market perceptions for quite a while. I think that's probably the most important thing to focus on.
Okay, what about the oil price? We are still seeing it comparatively, I guess, fairly weak. Is this at least a positive for US growth?
I think that every dollar lower in the oil price is a dollar in the pocket of US consumers, so it's really like an easing of policy. So yes, it's very significant for US consumers. I think if we get some extra investment as a result of clarification of the fiscal cliff, plus lower oil prices and lower interest rates, it's all looking fairly positive for 2013. That doesn't mean we're going to get above trend growth. It probably means we're going to get something around the 1.5% to 2% area, which I think is a bit lower than the equity market's currently expecting.
Stephen, we will be hearing from the RBA's head of economic analysis today, watching that one closely, as we always do when someone from the RBA speaks. What do you think the outlook is now like for the central bank? Do you think we'll see a cut in December or February?
Look, I think the RBA characterised an improvement in global conditions broadly. I think the recent moves in equity markets and expectations of growth have indicated that that assessment is probably questionable, that the expectations for growth have been lowered somewhat. That may allow an easier path for an easing in December. I think the RBA is still quite concerned about possible pass-through of the carbon price into other parts of the CPI. However, I think overall the strong Australian dollar is really causing problems to the export sector, and I imagine we're going to see continued news of further closures of export industries. So the RBA really has to act to try to offset that. Also, we've got a mining sector which is really coming off the boil, and employment there is declining, not increasing. So the labour market is slowly deteriorating here, and I think the RBA will act possibly in December.
Okay, Stephen Nash from FIIG, thanks for joining us.
Thanks.